Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. All right, so now that the intro is done, let's unmute for the live chat. Hey guys, all right, so I'm going to start the overview. So starting off with the dollar, pretty much same thing as I said in the last recap. We're seeing the dollar come into this ascending trend line. Now, it has definitely exceeded my expectations on how aggressive the drop has been. I had been thinking that we were going to see around here, a more powerful rise to the upside. So coming into these fair value gaps, as we did right here with this wick, I was looking for continuation to potentially come back towards about 106.5 and potentially even an extended move all the way up towards 108. But the markets thought otherwise, pulled us lower after tapping into this liquidity, and now we're trading at this ascending trend line. And we're going to get a lot of answers this week, maybe even potentially tonight as the futures open up for the dollar. Are we going to have that continuation down, breaking this ascending trend line, and then trading back into this lower blue zone from 100.39 to 97.32? Or will we find some stability here? Will we find enough liquidity, enough fuel to get a bit of a bounce back towards 104 to about 103.50? And I'm really eyeing this bearish fair value gap that we create on the drop to be revisited right here. So right around 103.49 to 103.869. So this would be a very lackluster rise. So if the dollar's going to remain as weak as it has been and it's going to pop up, this would be the level where it gets tested. And similar to what happened right up here, tap into that fair value gap and then fail further down. Now it's very likely that this ascending trend line does break eventually. Now if we do break past this fair value gap here, look for us to come and test the top of the blue zones around 104.88 and potentially tap back into 105. But we are on the clock. It's very likely as we're slowly grinding up, okay, as we're slowly grinding up from here, if we're going to do that, watch for this to eventually break down, and it's probably going to have more of a bearish price action, bearish implication, and you'll probably have a pretty decisive breakdown, finally reaching this lower blue zone. But we may skip all this if we gap really weak into the futures or when markets open Monday and just see continuation to the downside. So this is going to be a great week coming our way, whether it's up or down for the dollar. A lot of volatility in my opinion, and we're going to get a lot of questions answered. Now let's get to the Dow, S&P, and Nasdaq. So starting with the Dow, had a nice failure off of this fair value gap. It's been failing off of this higher fair value gap here a couple of times, and since the drop, we did have a pretty nice day on Friday, a nice closure, nice bullish engulfing. So we may actually get an extended rise to fill out this fair value gap here and maybe tap towards the low end of this higher fair value gap once more, maybe filling out this really small one here you see kind of overlapping. So we do have some potential upside here, but if we do have the dollar strengthening out as I expect, just look for this failure just like this, okay? And you'll eventually have a pullback, may take a couple of days, weeks, maybe even months, just depends on how slow or fast the markets are moving, where we do come back towards these fair value gaps down here and look to test this descending trend line as a bullish structure, as a bullish breakout. Because if we can hold this general zone here, it's going to be very, very bullish in the coming months. Now, again, this is all predicated on the dollar. If the dollar comes out really, really weak into the futures or early Monday, then you're probably just going to see continuation. And this right here, this drop that we see on the Dow that came very close towards this descending trend line would have been it. Would have been that retracement back to test out the breakout zone. We didn't get to the actual line. We just got to the I would say the upper bands of this zone of the trend line, and then it found continuation. I do not see this being the case for a couple reasons. One is this pivot here, okay, is more bearish than bullish. Failed to take out the high here, made a lower high after I would say, breaking this uptrend structure. Okay, so it's more likely that you're going to see that continuation to the downside. But again, if the dollar is going to come out super weak, this structure will break and it'll continue higher. All right, so you just have to keep that in mind. Overall, I do have a short-term, bearish bias, but midterm, I have to be somewhat bullish on the Dow. And then when I look out further into the year, just like with Bitcoin, as we'll get to that, I do have a more bearish take on most indexes. All right, next is S&P. So S&P coming into this rising trend line. Now, this is the chart that does bring some doubt on how strong the dollar will actually be and whether we're going to have that continuation up. This makes me feel like we will have continuation higher for the indexes, for Bitcoin, etc. The S&P chart's far more bullish than a lot of people are giving credit for. So just to put in perspective what I'm seeing here, I mentioned in the last recap, we've had this descending trend line for a couple months now, actually for about a year or so, right? So we made the high, the all-time high here in January of 2022, and then we retested it here, or at least I would say confirmed that it is a descending trend line here in March of 2022. Then we came back towards August of 2022, came back again November 2022, and then we had a couple touches between November, December, and now here in January 2023. So we've been in this descending structure for about a year. And if you notice very closely, from the creation, we had the test here. So this was, I would say, a pretty moderate amount of time before we came up, made the pivot that would then create the future, right? Create that descending trend line. And then look at, from that failure, we had this massive amount of time, right? This massive amount of time where we had not come back up towards this descending trend line until all the way over here. So let's actually measure this so you can get an actual visual representation of what I'm talking about here. So from the creation, you have from this high pivot right here to here. All right, so you've had about, actually I picked the wrong one, my apologies. Whoops. You want to do the date range, not the price range. Let's do that one more time. Date range, here we go. So from the high right here to here, you had about 84 days, so 60 bars. And then from here to here, take a look at this. Look at how much time passed before we came back to test this descending trend line. 140 days, so multiple months. And then look what's happening now. We're seeing that time is getting shorter and shorter, 107 days. And then the next time we tested this descending trend line was right here, which was 12 days. And then again, we did it literally the next day. And then right here, we had another little sell-off, but nothing compared to what we had here or here. And it took only, I want to say, a couple weeks, maybe 2 or 3 weeks right here. So 34 days, so about a month to come back, and now we're about to do it again. Test this descending trend line once more. So when you see a trend line, whether it's ascending, descending, horizontal, being tested over and over and over in quick consecutive fashion, that's when the trend line is weakening, okay? A trend line being tested often, fast, is when it weakens. All right, so we're seeing this descending trend line showing signs of potentially breaking maybe next week. So this would tell me that we are going to see more risk on assets go higher. So tech, crypto, high velocity stocks, etc. So I am bullish on the S&P. Again, Monday is going to answer a ton of questions. That's why I'm looking forward to next week. We're going to get a lot of questions here. Are we going to get denied here, or are we going to continue higher? And this structure where we finally started making the higher lows, right? So here's the low after a lower low. So lower low, lower low, lower low, and then finally made a higher low for the first time in about a year. So this is a huge, huge deal. And it's really showing me that we may have continuation to break this structure and make it all the way towards this fair value gap here. So we may have some more upside, guys. So I'm looking forward to next week. All right, next is NASDAQ. So let's take a quick look at NASDAQ. Similar to, more similar, I would say, towards the Dow, right? So NASDAQ has been a bit lackluster when you take a look at it from a structure standpoint. Okay, so unlike the S&P and Dow, I should say, it didn't really make a higher low. Like the S&P made higher lows, whereas this made like a triple bottom structure, which is fine. It's still pretty bullish, and how this candle closed does give me some hope that the Nasdaq can take out this pivot right here. If it does that, then I think it's very, very likely you're going to see it shoot up towards this bearish fair value gap extremely fast within a day or two. A very impulsive day potentially coming if we take out this high pivot at 11,687. But out of the three, the Nasdaq does look the most bearish, which makes sense because it's also the most inflated, right? It's the most inflated. It also has the most room to the downside, and it's dropped the least because it's risen the most. So it's very common for the Nasdaq to be a little bit more bearish looking, as it is always looking more bullish in a trend. So in a trend, you'll see the Nasdaq is always more extended, looking more impulsive, unstoppable really. But when you're in a downtrend, it's the same thing. It looks far weaker than its counterparts, being the Dow and the S&P. But it will follow. It will follow like it always does, the S&P and Dow. So if they have upside, watch for the Nasdaq to have upside. And we potentially have here a bottoming structure if we quickly take out this pivot and show continuation to the upside and take out these highs up here. All right, and that's a clear bottoming structure. You have like this, you could say a triple bottom structure, or if you just want to kind of combine these pivots, have a double bottom structure. And the point is, it looks like a slowdown from the drop to lead to continuation back towards this green zone and potentially even this higher bearish fair value gap up here. So I'm liking how the Nasdaq looks. Again, it has to follow the S&P and Dow. So as long as they stay fairly bullish, the Nasdaq should do the same. All right, next is oil. So quickly on oil, like I mentioned in the last recap, very powerful chart. This is only showing continuation as of now. I mean, we had a slight tinge of weakness here, but there was no follow through as expected, right? And if you go back to the recaps, I've told you, do not look for downside on oil. It's very unlikely. It can happen, of course. It's all probabilities, no guarantees in these markets, but the probabilities are extremely high that oil is going to have a serious move up, and I mean a very, very serious move up. And this is just the beginning. Came down towards the bottom of this monthly bullish structure, okay, holding it for many, many months, tapping into it, and then finally, bursting up, making that higher low off of this really, really small bullish fair value gap, and now taking out these highs. And in my opinion, we're looking for a move back towards the 90s and potentially even higher, depending on how things progress during the winter time into Europe and how the war in Ukraine develops. So watch out for continuation going up towards potentially even $100 if it gets really, really crazy. A very powerful chart on oil. I have to be bullish short term, midterm, and long term. It's very, very bullish. Next is gold and silver. Gold, like I mentioned before, beautiful continuation. I think it's showing some signs of slowing down, but again, it's all predicated on the dollar. If the dollar has an impulsive move down, gold will have an impulsive move up. It's been doing very, very well as an inverse to the dollar as of late, as we can see here. And if we do go up, the next level is this fair value gap zone here, which is right around 1960 to about 1975, 1970. And then we may start tapping into the 2000s level. And I do think 2000 will prove to be an extreme level of resistance. Now, it doesn't mean it won't get through it at some point. It may. But I do think before we get through something like that, we're going to have a massive consolidation. And you can just take a look at how impulsive this move's been going. It's very likely we do have some sort of slowdown. And the slowdown will have a bullish bias just based off of what's happened here. All right, there's a bullish structure that, it was a bullish descending trend line in my opinion. It was showing us that it was a very impulsive down move, and that when it would break, like I was warning back here, if it breaks this level decisively, you would have an impulsive move higher. And that's exactly what happened, though it has gone beyond my expectations, believe you me. We were long a lot of gold positions here, GDX, GLD, etc., and we closed them out as we went higher, especially into this rising triangle structure. Closed out most of them, if not all of our gold positions. So I did not see this coming, but that's okay. So I do see if we do come back down, we have the levels to watch out for, and I do think these are just reload levels for an eventual continuation higher. All right, it may take a couple months, but gold looks absolutely fabulous. And ideally, I would look for a retracement all the way down towards 1800 again, because if it can come back down towards this consolidation, hold this level. So anywhere from 1800 at the low to the high of like 1870, 1850. If it could hold that zone decisively and have continuation, I think that's extremely bullish, and you're probably going to be looking at 2,000 plus per ounce. Next is silver. So silver, unlike gold, is definitely not as bullish, showing more of a topping structure, or at least the beginning to try and build it. Silver does give me some pause in thinking that we will see a slowdown in the rare metals, and it is warranted. Like gold is so overextended that it would make sense. Silver, though, unlike gold, is becoming more and more popular with industrial use, so it moving price is going to be a lot harder going into the future as we use more silver in solar panels and phones and car batteries, etc. So the silver price is going to be, I would say, way down far more than even gold is, and gold is way down quite a bit. So it's going to be hard for silver to move as fast as it used to, but in the end, it should still hold the correlation with gold. If gold goes up, it'll eventually go up. If gold goes down, it'll eventually go down. So if gold does slow down, as I'm seeing potential for that, especially if the dollar is going to stabilize where it is, maybe have a slight rise, then look for silver to come back down towards these fair value gaps down here. I do not see this small one holding. It's very likely it comes down to at least 22.491. I do think it comes down a bit lower, coming towards about almost 21.5, and maybe even back down towards 2050. Okay, but it is still bullish. All right, it's still bullish. It's changed character quite a bit. Broke this consolidation bullish, took out this high pivot here. So gold and silver are super bullish in my opinion. I think we just should watch out for potential re-entries on pullbacks. All right, let's take a look at Bitcoin, see what's going on with that. Bitcoin's been doing absolutely incredible as of late. So let's close this out here. So Bitcoin on the daily broke this descending wedge structure pretty decisively. Had a nice little slowdown here, right where the FTX drop started, and then boom, had a continuation. If you remember in the recaps, I was warning, do not get too bearish here. Don't look for shorts here, because you're not dealing with a daily breakout. You're dealing with a weekly breakout that is also leading into a monthly change of character. Okay, again, short term on the monthly. Okay, it's a monthly potential breakout here. We still have 9 days, or about 10 days and a half. All right, so watch out for continuation, and I still see continuation, and these weekly candles are telling me nothing different. So we had this impulsive breakout. This is exactly what you want to see. This is textbook. Okay, so when you're in a consolidation, bullish or bearish, you want the breakout of that consolidation, bullish or bearish, to be decisive, impulsive, powerful. That is this. Okay, a 21.95% candle, 1 week candle on Bitcoin is extremely powerful as a breakout candle. That's textbook. That's exactly what you want to see. And now this week, again, smaller than this week, but continuation, closing above the highs of last week, which was 21,367.25. So as long as we don't sell off from here to there in about 5.5 hours, that's still extremely powerful. Now, we are getting extended, but we're not anywhere near overextended. This having 3 bullish weeks, and this first bullish week being just a I would say not a doji, but just a consolidatory candle. It's really just 2 bullish weeks so far. That's nothing. Okay, you do 3 candle surges all the time weekly. You have multiple candles going bullish all the time, same as bearish. So this is, in my opinion, threatening to be just easily continuing higher, easily. So getting towards the 25,000 plus, and then the monthly is also telling us that this is very likely to continue higher, or at least stay in this general area. Now we may start to slow down next week if it's a fairly slow week, which is unlikely. You may get that consolidative week where you're not moving much. You're maybe having in like a 5 to 6% range, and you're kind of just trading within this candle here, an inside bar, where in the monthly chart that would look pretty bullish. You'd be looking pretty much how you are right now, trading around 22 to 23,000. So that is a potential, but that's not really what's being insinuated on the weekly chart. Okay, so you may get a couple days where we do slow down here, especially after this sort of candle. All right, so depending on how the futures open up, we may end up pulling back here and kind of trading within this candle here. And if we do that, then look for the weekly to close bullish. Okay, so this weekly candle will close bullish. It'll close somewhere around here, well above the high of last week. And then if we stay within this inside candle here, so let's actually pop this range here. So boom and boom right here. So if we're trading within this candle here on the monthly, because remember, next week is the last week, I believe, of the month. This is where the monthly candle will close out, which is extremely powerful. not only are you engulfing the doji, you're engulfing the last bearish monthly candle right here. So if we do end up closing for the month above 21,474, 473, that implies that this next month candle will be bullish. All right, you will be bullish, and you're potentially starting a 3-candle surge at the very least. A 3-candle surge similar to this, right? So like I've been mentioning, I think we're in a repeat here of 2019 where went into a multi-month consolidation. And then we had the breakout. So this is the breakout right here, a 30% candle almost. And then you had the continuation. And then you had another continuation, 3-candle surge. Here's another 3-candle surge. So this could be happening at the very least, which would lead to a macro lower high, which is what I'm seeing here. Here's the high of 2017, 2018. And then here's the lower high of 2019, then leading to the COVID breakdown that brought us all the way back down to 4,000. Same thing here, all-time high. Then we have that move up towards the 30,000s, potentially even 36, 37,000. Then break down again to go down to new lows. So another macro lower high. It's very basic, guys. This is what happens in bear markets. You're going to get a bear market rally that could last a week, could last a month, could last a year. But in the end, it's a bear market rally. It's a sucker's rally, and it will eventually go lower. Whether it makes new lows is undetermined. It usually either makes slightly new lows or makes a slight higher low from the all-time low. In this case, I would say it's more likely to make a new low, just based off the structure I'm seeing here. But don't be worried. It's very likely we're going to see continuation, but also keep in mind it's all probabilities. Nothing's guaranteed. And if you're noticing, a lot of bad news keeps coming out. A lot of bad news keeps coming out, whether it's about Bitcoin specifically, other cryptos, exchanges, government, blah, blah, blah. It's going to keep coming out because what's happening, in my opinion, is keeping the retail money out of, as much of it out of crypto, out of Bitcoin. And then once we get towards the 30,000s or 28,000 around that zone, then you're going to get the good news start rolling in to get the unfortunately the dumb money to start buying up there, while the smart money, us who've been long all the way down here, we're going to be selling what they're buying. All right, so that's how this works. Get into the habit of getting outside of the cycle. All right, you got to be outside of the cycle, do what they're not doing, and then just slowly reverse. As they get bullish, you turn bearish. As they get bearish, you turn bullish. It's that simple, guys. All right, so that is it for the recap. I'm going to end the recording here. If you're watching the recording, you couldn't make it live. That's too bad. I hope you do make it live someday. I'd love to have you in the room. If you have any questions, make sure to leave a comment on the video or join the Discord. I'm always available, or almost always available, and we have great people in here that can always help you and answer questions and make you better if you want to get better at anything. All right, guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.